Right, I thought I'd revisit this bit of a Elliott wave kind of take on the S&P 500. I haven't really done many videos this week because I haven't actually touched my positions that much. They're just all working for me. I'm still short the S&P. I trimmed it a little bit down here when it was 41.50. But I'm still short. Just cashing a few. I'm along the Aussie with all the commodities booming. It's kind of hard to chase things like oil or coal, gas, iron ore, wheat, gold to a lesser extent. It's kind of hard to chase them when they're spiking. So I've gone along the Aussie. I think the Aussie is really lagging, and the Australian economy is in for a massive boom on the back of these commodities, and that boom will mean interest rates rising more, which will mean the currency kind of rallying. I'm still short the Aussie 3-year and 10-year bonds. They've been going great. Been short them back as far as January last year. Short the US 2-year treasuries still. Been short them since September, October last year. And I've gone short the Bund again. So then that's been working out pretty well. I shorted that before the news came out the other day about them issuing some massive bond. Anyway, so that's what they're doing. They're working away pretty well. I'm still quite bearish, the S&P. I'm a little bit wary for a few reasons, but I guess this is driving part of my bigger thing, right? So I've seen these waves up 1, 2, very good choppy second wave, smaller fourth wave there, big pullback up to the fifth one here. Wave 1 to wave 3, that's a 1-to-1 relationship. Wave 5, right there, this little one up here, was the 38 Fibo of that 3. So it's a really nice pattern that it did up there, like the 1, 2, 3, 4, 5. These are quite good retracements in there on the Fibos, which you can look at that by yourself. I didn't want to get the chart too messy. Now 1, 2, 3, 4, 5 gets followed by an ABC, and if we look at where that extension could come to on this ABC, that's like a 1-to-1 from the high down to this low here, that 42.20 low, back up to the almost 4600, and coming down. That would take us to 4,000 if it did break through, and it does look like it's doing that. You can see here this level here, which is the bottom of wave 4, right, where when it's busted through here, right, it's come back, tested, and it's failed, right? I guess that kind of reinforces part of, that Fibo thinking that this main 1, 2, 3, 4, 5 is over, because this low in the 4, right, has been broken in this correction. And that reinforces in terms of this high here being broken. Obviously in the Elliott wave theory, you don't want these overlapping waves on these moves, right? So, and this ABC, of course, it hasn't overlapped that B there. So it's still on the way down. The trend is down. I guess there's a few planets lining up for this 4,000. One is this little gap here, which I've mentioned quite a few times. There is a nice round number, of course. If we take this up to this level here, just on this wave, since this move here, that big move, and that really was a major correction point, it does come in bang on the 50 Fibo, right? So, it does rhyme. Being a musician, like those kind of analogy, it does rhyme a little there. A bigger move is not out of the question, and when I look at this, really, that was the last significant area where there was where there was debate, really, about the valuation of the market. Ever since then, it was just kind of a bit whatever. So it kind of makes sense for it to come back to there. That's 3,500. Quite a correction. Now there's a couple of other things kind of going on as well. These big jaws of death. I've been watching this one for like literally years. Not pretty. And it is coming down to kind of test this line here, which it hasn't managed to break it. That's one to watch. And I guess also when I look at this topping pattern here, I do see the possibility of that coming to fruition here as well. And that would coincide with it coming down to 4,000 here. Now, one thing about these jaws of death patterns, when they do come off, and they don't always come off, they kind of have a tendency to kind of fail around about the middle. You know, like they go, you get a high high, a lower low, a high high, then a lower low, and then when they come back, they kind of fail somewhere around the middle here. This one kind of went through a bit there, right? But it had a bit more of a retracement than normal, but to me it still failed, and to me it looks like it's going further down, way on down south, London town, right? So, and that's really kind of what happened here, where it rolled over and it formed, coming in a low there, you know, up, down, right? This had up, down, up, and it hasn't finished the down move in my mind. So that's where we're at on the S&P 500. That's why I'm still short, apart from the non-technical factors of, you know, rates rising, inflation, which is, you know, just come out, and it's, you know, I mean, the annualised monthly inflation is over 10%, right? I think CPI was like 0.9 for the month, right? So that's 10.8 for the year. Insane. And the energy prices haven't even come through yet, let alone the bread prices. So there's a lot more to come through in inflation. The geopolitical risk in Russia and Ukraine is still big. Russia defaulting is on the cards. If Russia defaults, I would keep an eye out on Turkey. Having worked in running emerging markets business, Russia and Turkey are peas in the pods, a lot of cross holdings. The Turkish banks go down, they will take, the Russian banks go down, they will take Turkish banks with them. There'll be a lot of collateral damage there. Russia and Turkey going, that would have a big impact to some of those European banks, some of those ones that do a lot of commodity margin lending, for example, other forms of, you know, secured lending. They'll have their hands full trying to get hold of assets in those countries, given the governments and the geopolitics of what's going on. So that there is a contagion risk. Coincidentally, if Russia defaults, the last time they defaulted was in 1998, and that's when Yeltsin basically got booted out and Putin came in. That was after the Chechen war had been dragging out. Inflation was, you know, skyrocketing. The ruble had been devalued. You know, they had problems in the coal mines, and the coal miners weren't getting paid, and they were like out in the streets. So there's a lot of similarities between what happened in 98 that brought Putin to power that will be on his mind right now, because he obviously doesn't want to get shown the door in the same way that Yeltsin did. So it's kind of a bit of an interesting history repeating there in terms of like a Russian default. I think there's a good chance Russia will default. Why they would bother paying anyone a brass razoo on their dollar debt is beyond me, let alone the fact that a lot of their dollars have been seized, so they actually can't even pay them if they want to. Look, so that's the rundown. As I said, you know, it's 1, 2, 3, or 5 very clearly. ABC unfolding. 4,000 is the target at least, possibly lower, 3,600. Few reasons for it looking ready to break. You know, that bottom of wave 4 has turned from resistance, or turned from support into resistance. There's a bit of a jaws of death waiting to happen. There's a long-term trend line here that looks like it's going to get tested. Geopolitical risks all being unwound, and just as cash has rushed into the market over the last how many months, when it turns to run away, it will run away very quickly. It's not very sticky. Anyway, that's about it. Have a good weekend. I'll wait for the weekend on a whole lot of gigs. Not back until Tuesday. Catch you later. Ciao.